You're watching The Fix with me, Karima Brown. Now, banks and financial institutions have been in consultations with government and other stakeholders on how they can assist in mitigating the impact of COVID-19 on businesses and families. Joining me to discuss their plan is the South African Banking Association's executive, Cas Coovadia. I'm also hoping to be joined by John Dludlu from the Small Business Institute. Cas Coovadia, let me start with you. Good morning. You have been in consultations with government. Government has said that they're leaving it to you. We've seen the South African Reserve Bank taking a number of measures. Some would say quantitative easing. How is that impacting on the banks and their position in relation to things like interest rates, but also things like bond holidays and financial assistance to businesses and individuals in financial distress?
Karima, thanks for having me. The banking industry in the last week has been engaging quite a bit to see what we can do. Firstly, we agreed that we need to have an exemption under the Competition Act to enable us to actually meet and talk about issues that otherwise would be considered in the competitive space and would be considered collusive. So we spoke to the Competition Commissioner, to Minister Patel, in whose ministry this falls, and we managed to get an exemption under the Competition Act. That was gazetted on Monday, I think, last week.
Yes.
Since then, we've had a number of meetings, and we've agreed the following. One, that we will assist all customers that are in good standing, be they SMEs, be they individuals, be they corporates, whether they're holding mortgage loans or other sorts of products. People have asked us why we can only assist on a case-by-case basis and why we can't take the position that banks in the UK, for instance, have taken, where they've taken a portfolio approach saying payment holidays for all mortgage loan holders and so on. And our response has been that they've been able to do that in the UK and other jurisdictions because government has actually put a fiscal cushion in place. We don't have the fiscal space here. The SARB, as you say, has introduced some liquidity, has used their money market mandate to actually introduce some flexibility in the system. And we are working within the context of that. What we have said is that banks are contacting their customers. We're working with banks to see if we can, each bank can have a dedicated number for this period so that you don't form the normal customer number. We're encouraging customers to come into the banks, and banks will assist all those in good standing.
Okay, let me just bring John Dludlu in quickly. Mr. Dludlu, you represent small businesses. The measures that Mr. Coovadia is talking about on a case-by-case basis, is that working for your members, particularly industries such as restaurants, hair salons, people who pay monthly rents, who obviously can't function now and won't be able to make good on their rents or their bonds and face the possibility of evictions?
Good morning, Karima and Cas. Thank you for having us. Yes, what the banks have done, I think they're doing it within limitations. It's quite commendable for them to have launched a coordinated action. But obviously more could have been done, but we understand as well that you can't have a blanket situation where you ignore the profile of an individual client. But there is still more that big business can do. For example, I think the restaurant industry, which has been hard hit by this, needs to have targeted support from government and needs to have targeted support from landlords by way of rental holidays. And we need to make available as quickly as possible the UIF relief for all those employees who are in the main on a temporary basis. They rely on their tips instead of salaries. So we need to find creative ways of helping them out, because there is a real danger that these people are not coming back to their work.
Mr. Coovadia, let me just have you continue. You were speaking about the fact that you don't have the fiscal space to do the blanket, holidays as they've done in countries like the UK and France. But is that perhaps not something that you should be raising with government? Because like Mr. Dludlu says, a lot of people are not expecting to return to jobs. I mean, we have placed in, measures in place, but the reality is that people are going to lose their jobs. So, for example, if a restaurant falls behind on rent, surely you can ease the burden if the bondholder is given a holiday, and then that trickle-down effect can happen with people who are renting premises, for example.
Now, look, Karima, we are in constant discussions both with government and the Reserve Bank. The reality is that we don't have much fiscal space in South Africa. We're probably going to have to borrow money to create some sort of fiscal stimulus during this period. And maybe that's something government should consider. I don't know. We need to talk about this. But the reality is that even pre the crisis, we had a serious fiscal problem, a fiscal deficit, and the economy was actually growing in a very pedestrian way. The COVID crisis has simply exacerbated that situation. So we are in constant discussions with government. We are in constant discussion with SARB. So if a restaurant owner has a bond, what we would advise the restaurant owner to contact his bank. If the bank and the restaurant owner discusses and a bond holiday for that restaurant owner improve the restaurant owner's cash flow to enable the owner to actually pay his workers and so on during this period, that's exactly the sort of discussion that we need to have, client needs to have with the bank. So all the banks are saying is that given the lack of fiscal cushioning here, we can't have a portfolio approach towards this, and SARB is also of that view. If a customer walks in, we will look at the customer and we will assist. So customer A might need a bond holiday as the best instrument to tide that person through and to tide his or her business through if it's a business owner. Customer B might need a restructured loan.
Yeah.
So the thing here is for everybody, all organizations that we're talking to encourage their members to go and see their banks, pick up the phone, speak to their banks.
Absolutely.
Not when you hit the wall, but when you're beginning to feel the stress now.
That is obviously quite a responsible way of going about it. In the Sunday Times this morning, Mr. Coovadia and Mr. Dludlu, I want your comments. The Finance Minister, Mboweni, is said to have said that they will use funding that International Monetary Fund and World Bank will make available to support countries. And this, of course, comes after the Moody's rating that downgraded South Africa to junk status. To quote Mr. Mboweni, he said this morning in conversation with the Reserve Bank and the Treasury, I've indicated that we should proceed and speak to the IMF and the World Bank about any facility that we can access for health purposes. From the bank's point of view, given the fact that we're also servicing this debt in foreign currency, is this something that you welcome? Is this inevitable? Do we have no choice? Let's start with you, Mr. Coovadia.
Well, Karima, we've been, as business, indicating to government for quite some time that if we don't actually take hard decisions to make such structural changes in the economy, control public expenditure, stop wasting money on non-strategic SOEs, improve our fiscal situation, at some point in time, we're going to be knocking on the door of the IMF. If the minister is of the view we should do that, it's a very, very unfortunate situation to be in. Let's be quite clear. So do we have too many choices? We don't have too many choices. But the position we've taken even on the downgrade is that, again, unfortunately, this is not a surprise, but we've to a certain extent pulled together as a country during the COVID crisis. There's some sort of a compact coming together between different stakeholders. Let's use that compact to also begin to address the economic problems that we're going to have not only during the crisis but post the crisis. And if the minister is of the view that one tool to use is possible IMF money, well, then that's a tool we need to consider given the circumstances we are in.
Mr. Dludlu, do you agree with Mr. Coovadia?
You know, I agree. I was shocked when I read the first part today that led in the Sunday Times that was going to the IMF. But I was relieved when I read the story that this has got nothing to do with the structural adjustment program. It's got something to do with the window that is given now, which is COVID-19 related window. But can I just go back to my frustration? Our frustration is that these piecemeal announcements, these ad hoc announcements do not help the situation. What other countries have done is they have looked at this. We have to consider this as a nuclear war. In a nuclear war, you don't go to war. You don't respond with an okadi, with a penknife. You actually try, if you have nuclear warheads, you train them as the enemy instead of doing this piecemeal announcement. 2 weeks ago, we had the Reserve Bank cutting interest rates by 100 basis points. And then a few days later, the bank announced that it is buying some bonds. And, of course, we had asked as SBI, we had asked for a 200 basis point cut. It's not too late for the bank to cut more interest rates.
All right, let me bring Mr. Coovadia in there. Mr. Coovadia, there's a plea that you go further, that you cut interest rates more, and also that you don't address this issue piecemeal. If one thinks about the fact that about 60% of South Africa's population is involved in the survivalist economy, things like micro-banking, things like small businesses obviously need all the cushioning that they can get. Should you not consider a sector-wide approach, and should you not consider dropping your interest rates even further?
Karima, we are doing everything we can within the context of current regulations, within the context of guidelines issued by the Reserve Bank. If we do anything that go outside of those regulations, we then fall foul of international Basel restraints and constraints, which then has a negative impact on the credibility and soundness of the banking sector. Now, if we are able to get the fiscal assistance we need, then there's a possibility of doing a lot more without impacting on the soundness of the banking sector. The banking sector is an industry that's regulated very differently to other industries because we hold depositors' monies in trust. Now that's just the reality. We can go much further, but then it puts the sector at risk. That's not good for the economy. That's not good for the country, particularly on the back of a downgrade that we've just received. So I think that what we need to do is we need a concerted effort between the banking industry, government, SARB, to see what can we all do and what sort of regulatory flexibility as well as fiscal cushioning is possible to enable the banking industry to go further without impacting on the soundness of the sector. The reality, we've spoken to some of our international bank members. There isn't a jurisdiction in the world where the banks have been able to do portfolio type of approaches towards this without some sort of fiscal cushioning. Not one in the world.
Absolutely. Of course, the situation is unprecedented globally, and perhaps all institutions, including the banking system in South Africa and globally, should be looking at doing things radically different. Thanks so much to Cas Coovadia there from the South African Banking Association, and also Mr. John Dludlu from the Small Business Association. Still ahead, the role of the church in ensuring social solidarity and social cohesion in the time of COVID-19.